On the program today, India is seen to grow at 7% at least in FY27 by most conservative estimates. Has BRICS been tightening its grip on gold and oil, weakening the dollar's hold on trade? We'll analyze this. Trump 2.0 first year can be categorized by tariff shocks and structural disruptions to global trade and also the multilateral trading order. And the Delhi Book Fair sets a global benchmark in reader-publisher engagement with record participation. Well, before we move into our top story, let's listen to Prime Minister Narendra Modi speak about the potential for investment in the Indian economy. He was particularly speaking about Kutch and Saurashtra in Gujarat becoming an anchor of ancillary industries.
भारत दुनिया की फास्टेस्ट ग्रोइंग लार्ज इकोनॉमी है। इन्फ्लेशन काबू में है। एग्रीकल्चर प्रोडक्शन में भारत नए रिकॉर्ड बना रहा है। भारत मिल्क प्रोडक्शन में नंबर 1 है। जेनरिक मेडिसिन प्रोडक्शन में मामले में भारत नंबर 1 है। दुनिया में जो देश सबसे ज्यादा वैक्सीन बनाता है वो देश का नाम भारत है। भारत को ग्लोबल मैन्युफैक्चरिंग हब बनाने में सौराष्ट्र और कच्छ की बहुत बड़ी भूमिका है और ये भूमिका मार्केट ड्रिवन है और यही बात इन्वेस्टर्स के लिए सबसे बड़ा भरोसा बनती है। यही राजकोट में ही 2.5 लाख से अधिक एमएसएमईज हैं। यहाँ अलग अलग इंडस्ट्रियल क्लस्टर्स में स्क्रू ड्राइवर से लेकर ऑटो पार्ट्स, मशीन टूल्स, लग्जरी कार के लाइनर्स, एरोप्लेन, फाइटर प्लेन और रॉकेट तक के पार्ट्स ये हमारे राजकोट में बनते हैं।
Well, and the Prime Minister's words, of course, have been supported by many, rating agencies. And the latest to bring out a report on India's growth forecasts is BMI, which used to be for Business Monitor International. It was acquired by Fitch, but it produces its own ratings apart from Fitch. And it sees India's GDP growth for FY27. Mind you, everyone else is talking about FY26. But it sees India's GDP growth for FY27 at 7%. And that comes from 7.4% in FY26. And the growth is supported because of the favorable policies and, which are structural reforms and rising exports. The mood is definitely clear. We can see these are tailwinds. And Q3 FY26 expansion is above 9%, and that highlights strong economic momentum. And how long will these tailwinds continue? They are actually going to be strong because manufacturing has rebounded as well as services is doing well. And that is the largest contributor. Let's move on to our next slide. We can see that policy and reform have been driving this growth, and we know last year that the GST and income tax reforms had boosted the purchasing power of the average Indian. And the RBI also had cut rates by about 125 basis points, easing the money supply into the Indian economy. So that provided more money, and hence people were able to purchase more. The loans became cheaper. And also the labor code reforms and 100% FDI in insurance has attracted investment. Why is this important? The labor reforms, mind you, there were about 29 labor laws which were codified into 4 different codes, and that made things a lot simpler, simplified the procedures. And then the 100% FDI in insurance is actually providing a lot of risk-free access for entrepreneurs, and that also helps also in some solvency post, some sort of stress that companies can face. So solvency and as well as risk management comes in with that FDI. So that sets a good mood. Moving on to our next slide. We can see that the UN also has seen a positive growth outlook for India. We know that the UN is seeing about 6.9 to 7% in 2026. They're looking at a calendar year of 2026, which the current calendar year. So you are basically looking similar to what BMI is looking at the FY27. So India remains a bright spot amid geopolitical uncertainty, and there is strong domestic demand. We've been talking about that, which has been cushioning the external shocks. In fact, even the World Bank has, recently raised its forecast for FY26 to 7.2% based on very much this statement, strong domestic demand, which is cushioning India from external shocks. Moving on to our next slide, please. So what is India's global position? We've seen the Prime Minister state that fastest growing major economy globally. The IMF has also called India an engine of global growth, and S&P has upgraded India's rating after 18 years. The credit rating or the sovereign rating for India has been upgraded to BBB from BBB minus, and this happened after 18 years, which is showing that it's a stable rating for India. Moving on to our next slide, please. So, Prime Minister has called for investment. And predictably, the predictability, stability, and rising purchasing power, this is what the Prime Minister is referring to. Political stability in India is contrasted with a lot of regional turmoil. And there's a growing middle class. The growing middle class makes India a prime investment destination. Of course, the Prime Minister is calling for investment, particularly in MSMEs. But, the growing middle class, let's look at that. About 500 million people in India constitute the middle class. That's the combined population of, let's say, the United States and Russia put together. So you can see the kind of purchasing power and the potential market that the growing middle class has in India. Moving on to our next slide. So India, as the Prime Minister was pointing out, is the largest milk producer, number 1 in generics and vaccines, the second largest mobile manufacturer, and a leader in digital payments. We know that already. And the top 3 in solar power and aviation markets as well. So plenty for investors to look at in India going forward. We can see that this clearly shows that the Indian economy that trajectory of the Indian economy is what will drive investments into our country. Moving on to our next slide. And of course, there are risks, but with every risk comes an opportunity, so it depends on how it's looked. We can see that global trade tensions will continue, geopolitical risks, oil prices, all these are the kind of shocks that any economy is facing at this current time. But India sees opportunities because there are trade deals, and India is working on opening new markets, and this resilience driven by reforms and a strong domestic demand is what's propping up the Indian economy, and that will continue to happen in FY27, hopefully moving forward. Let's move on to our final slide, and this is what I was talking about a little earlier, is that India is on the fast track to becoming the world's 3rd largest economy. This is what Prime Minister said. This is actually the growth trajectory, the path of the Indian economy. And we can see macroeconomic stability, controlled inflation, everything that the Prime Minister did speak about. All this is the strong investor confidence. This trajectory offers attractive long-term, mind you, long-term returns. And long-term returns also we must put into context the demographic dividend that India has with a median age of about 29. Let's move on to our next story, and before we introduce you to our guest on the program, let's turn our attention to Iran. which we will be looking at in the BRICS story a little later, where anti-government protests have been persisting against what's seen as a fragile economy. That the economy there has resisted years of sanction is a fact as well. But you know, regional countries like Saudi Arabia, Oman, and Qatar, they are keen to see that oil flows are not destabilized. Here's a former Iranian diplomat on the subject.
The underlying economic reasons why this protest started requires certain measures, certain policies, or certain change in policies, which the regime is unable to adapt itself to. And hence, they have no solution, even they put down the revolt. This is going to happen again in 2 months or 3 months or some other future point. The regional countries, Saudi Arabia, and of course countries like Oman and Qatar, who have been acting as mediators, are anxious to getting some kind of a dialogue going between Iran and the United States, especially and particularly in order to avoid scenarios that could destabilize the flow of oil either in the Persian Gulf or, you know, stability in that region, which is very vulnerable.
Well, we're happy to introduce Dr. Charan Singh, eminent economist and expert on international trade and banking. He is with us, the CEO of eGrow Foundation. Thank you very much, Dr. Charan Singh. Now, how important are MSMEs and ancillary industries, you know, amid the global competition? Because we're looking at cutting-edge manufacturing, isn't it? Because that's where research and development is taking production in a sense.
Very, very important question. For a young demographic country, which you just mentioned, a country which is on the cusp of AI, which could disrupt markets, employment, this is the sector which is going to play a very prominent role. It already accounts for about 30% of the country's GDP. It also accounts for nearly 40% of exports. And also, if you look at the manufacturing output, nearly 40% of manufacturing output is coming from the MSMEs. MSMEs are also an important part in the informal sector. And they play a very important role in the informal sector by providing employment. Now, in case there is any disruption because of AI, I think the disruption will automatically get accommodated. MSMEs will serve as a buffer. So therefore, I think MSMEs are a very, very important component of the Indian economy. Now, the point that you mentioned, that in the global competition and the situation that is emerging, how does it play a role? Now, over the last few years, we have seen the supply chain, the depth, and the resilience. And that is what I think MSMEs provide to a great extent. They absorb any of these shocks. They are able to ensure that the manufacturing is taking place normally and the supply chains, there are millions of them, 6 crore of MSMEs in our country.
Right.
Just imagine, and 6,000 products that they produce. They're quite to a great extent supporting the automobile industry in a big way.
True.
Also, in many cases, there has to be an iteration and specialization. And these MSMEs provide that seamless iteration and the specialization that is required, and especially MSMEs in Bangalore, they are very, very high tech. Now, quality standards and certifications are also very important. And MSMEs have to ensure that if you have the best automobiles, you have the aircraft components which are being provided, the submarines, the ships, the quality standards have to be very high. And MSMEs are providing that in our country. One more thing which I would like to mention is the cost. They ensure low cost, and they're also ensuring innovation at that level. So MSMEs will play a very important role in the Indian industry.
True, and India's trajectory offers long-term returns, as we were saying earlier. Now, which sectors would you see investment sustaining for the long term?
Well, I think India has proven, and the Prime Minister also spoke today, that I think pharmaceuticals is going to be one area in which we are going to play a long-term, consistent long-term role. I think electronics manufacturing, semiconductor, you know the amount of investment that is coming in AI, both by Microsoft and Google in India. They're reposing confidence in the Indian economy, in the Indian manufacturers. So I think that is going to be another area which is going to be very, very, very resilient. The
Indeed.
new area of green hydrogen, I think again, is going to play a prominent role on a long-term basis. Infrastructure, logistics, you have seen that in the last few years, India has played a very important role. And
Yes.
Gati Shakti has also made it very, very important. The other new area which I am looking at is defense manufacturing with the geopolitics that is changing place in the country and around the world. I
Okay.
think the defense industry, EVs are the new things that are going to happen in a very big way in our MSME sector and in our
Right.
country on a long-term basis.
Do stay with us, Dr. Charan Singh, as we move on to our next story, which is about gold reserves. You know, as the BRICS bloc expands its gold reserves and consolidates energy exports, it is inevitably positioning itself as a formidable counterweight to dollar-dominated trade. India assumes the leadership in 2026 with a responsible, inclusive Global South agenda. But the group's growing influence, spanning finance, commodities, and geopolitics, signals a structural shift that could in time redefine the foundations of international trade. Here's our report. India takes the helm of BRICS in 2026. This takes place at a time when reports suggest that the 11-member bloc is on track to control nearly 70% of the world's gold reserves. The bloc has steadily increased its gold holdings, reducing dependence on dollar-based assets. Since 2020, BRICS central banks have doubled their gold reserves, with India now holding close to 880 tons. The group as a whole has amassed over 6,000 tons of gold, enough to dent the foundations of international trade, with China and Russia leading in reserves. Also oil. Combining Iran's oil with Saudi Arabia's and Russia's, BRICS controls a massive share of global energy exports, and Iran's willingness to sell oil outside the dollar system directly undermines the petrodollar, aligning with BRICS' gold-backed trade prospects.
Chinese imports of oil from Venezuela comprise no more than roughly 3 to 4% of its total oil imports, if not less, over the past couple of years, whereas China, as of last year, purchased approximately 13 to 14%, right, of its total oil imports from Iran. And that's to say Iran is at least numerically on paper 3 to 4 times more important than Venezuela, simply, even if we're just talking about energy supply here.
This gold-backed strategy is not just about reserves, but about stability, sovereignty, and shared prosperity. While India's BRICS presidency in 2026 is guided by reformed multilateralism, concerns of the Global South, and promoting digital and technological innovation, it supports financial and energy security efforts of the bloc.
Founded by BRICS countries, the new development bank has emerged as an important instrument of economic cooperation, promoting infrastructure and sustainable development of its member countries. India remains committed to supporting activities and efforts to further strengthen the bank as a credible, responsible, and financially sustainable institution.
BRICS now includes Egypt, Ethiopia, Iran, Saudi Arabia, the UAE, and Indonesia, and has transformed into a global force. With gold-backed trading systems and settlement infrastructure, BRICS is laying the groundwork for a new financial order, one less vulnerable to external shocks and currency volatility.
China or Russia, they are using alternate currencies, but US is responsible for any efforts on de-dollarization because international trade, that currency flows through that SWIFT platform. US has barred access of this platform to Russia or Iran, so they are forced to use alternate mechanisms.
Experts say this move signals the dawn of a hard money era, where physical gold, not paper promises, defines economic strength. Gold has symbolized wealth, trust, and resilience for centuries. As India leads BRICS in 2026, at a critical time for the Global South, the future of global finance is being strengthened through a veritable gold mine. The BRICS gold reserves do provide for a more balanced, inclusive, and stable economic order. The Economic Brief, DD India. Dr. Charan Singh continues to be with us. Dr. Charan Singh, we have time for just one question. But, while gold is a strong hedge against the US dollar, can massive reserves alone, displace the dollar's dominance? What more do you think is required?
Well, you're so right. Gold is playing a very dominant role in BRICS, and rightly so, with 50% of gold production taking place in this country, 70% of gold held in these countries. Now, the important thing is that over a period of time, US economy, which accounts for 25% of world GDP, it may not be very easy to displace dollar in a short time. Of course, to a great extent, we'll probably have non-dollar invoicing of trade. That is also something very positive, which was unheard of a few years back. 85% of world trade, where America was not a part, the invoicing would take place in the US dollar. That, of course, is changing after COVID and certainly changing after the Russia-Ukraine war. Now, with the BRICS playing an important role, enlarging the membership of BRICS, the gold production and the gold reserves, which are being centered in the central banks of BRICS, that is changing. Now, to that extent, the Russian currency, and of course, the Chinese currency are going to get quite a bit of benefit there. As was just mentioned, the BRICS Bank is also playing a very important role there. But if you ask in near future, we will be able to displace US dollar from the reserves, international reserves and balance sheets of central banks. I think that's not going to happen in near future. And that is mainly because a single country is accounting for a very large share of the global economy. That is the reason. Also, the central bank, the Fed Reserve, to a great extent, of course, there's a legacy, there's historical trends, but the Fed Reserve plays a very prominent role in global interest rate fixation, and therefore that role continues to serve on the balance sheets of central banks.
We leave it there. Thank you very much, Dr. Charan Singh. Thank you for putting all this into perspective for us. Now, moving on to our next story, the first year of Donald Trump's second term as President of the United States has been marked by a sweeping reset of U.S. trade policy. From across-the-board tariffs to targeted duties on key sectors, the measures have reshaped global trade flows as well as rattled markets. But even as Washington offers selective relief to key partners, the broader trade and tariff framework remains firmly in place. Diptanshu Kashyap reports.
Donald John Trump, do solemnly swear
that I will faithfully execute
that I will faithfully execute
the office of President of the United States
the office of President of the United States.
1 year into Donald Trump's second term, U.S. economic policy has been defied by speed and disruption. In 2025 alone, the administration issued 225 executive orders, rapidly reshaping trade and government operations. For markets and businesses, the pace of change has increased uncertainty, with policy shifts often outspacing supply chain and investment planning. For President Trump, the turbulence is temporary, and he insists the economic reset is laying the groundwork for a historic American comeback.
We're poised for an economic boom, the likes of which the world has never seen. Soon we will host the World Cup and the Olympics, both of which I got. But most importantly, we will celebrate the 250th anniversary of the Declaration of Independence. There could be no more fitting tribute to this epic milestone than to complete the comeback of America that began just 1 year ago.
Tariffs are the backbone of Trump 2.0's economic strategy. Since January 20, 2025, the US has raised import duties on goods from all global partners, invoking emergency powers under the International Emergency Economic Powers Act and national security provisions of Section 232. A 10% baseline reciprocal tariff was imposed, with selective exemptions negotiated through bilateral trade deals. Additional duties target imports linked to Russian and Venezuelan oil, fentanyl-related goods, low-value de minimis shipments, and trade deficit concerns, alongside sector-specific tariffs on steel, aluminium, automobiles, copper, timber, trucks, and buses. The administration has also flagged potential future tariffs following investigations into semiconductors, pharmaceuticals, critical minerals, aircraft, drones, polysilicon, and wind turbines. The tariff blitz sent shockwaves through global trade and financial markets. In the weeks that followed, Washington carved out limited deals and exemptions, while partners including the EU, China, the UK, Japan, and South Korea easing some of the pressure while leaving the broader tariff framework in place. As investors braced for a sharper slowdown, markets swung wildly, but the worst fears failed to fully materialize.
President Donald Trump's economic restart has narrowed trade gaps, but raised costs and complexity for businesses. While supporters point out stronger negotiating leverage, critics warn of inflationary pressure and long-term competitiveness risks. For investors and companies alike, Trump 2.0 has converted economic policy into a permanent market risk, one that continues to influence prices, policies, portfolios, and global trade. In New Delhi with camera person Praveen Sharma, this is Diptanshu Kashyap for the Economic Brief, DD India.
And India's publishing industry is showing strong signs of growth, driven by rising readership as well as regional language demand and expanding global reach. Now, one event that captures this moment and momentum is the Indian Book Fair, which is actually at the New Delhi World Book Fair, where culture and commerce meet at scale. Here's Diptanshu Kashyap's report. We leave you with this report. Thanks very much for watching. Namaskar.
The New Delhi World Book Fair is buzzing once again. With packed halls and long queues at Bharat Mandapam, readers flock in from across the city and beyond. Now in its 53rd edition, the 9-day fair brings together more than 1,000 publishers from over 35 countries, offering everything from textbooks and exam guides to regional language titles and global bestsellers. Free entry and an extended schedule have helped drive the crowds, turning the fair into not just a celebration of reading, but a lively marketplace connecting millions of readers of all ages with India's vibrant book culture.
पिछले 53 वर्षों में लगातार आयोजित हो रहा ये दिल्ली की पुस्तक मेला आज विश्व प्रकाशन जगत का एक प्रतिष्ठित और विश्वसनीय मंच बन चुका है। 20 लाख से अधिक पाठकों का और 50 से प्लस देशों की भागीदारी वाला ये आज विश्व का सबसे बड़ा बिजनेस टू कंज्यूमर पुस्तक मेला हो चुका है, जो लेखक, प्रकाशक और पाठकों का सीधा संवाद और सहभागिता के एक अनूठा मंच पर एक साथ लाने का प्रयास किया है।
India's publishing industry is booming, becoming a major force both at home and globally. The market grew from around rupees 50,000 crore in 2019 to 80,000 crore by 2024, with print books alone expected to hit rupees 100,000 crore. Educational books dominate, but over 45% of non-textbook trade books sell in regional languages. With nearly 9,000 publishers and 21,000 retailers and more than 118,000 shipments of printed books exported between November 2023 and October 2024, India is emerging as a hub for knowledge and literature. Digital reading is on the rise, while the One Nation, One Subscription initiative gives millions of students access to over 13,000 e-journals, further strengthening India's global publishing footprint.
The trend is back. When the gadgets came, people thought that this trend will get over. And everybody was scared. The publication houses were very scared when the e-books were launched. But today, if you see, we are back. We're back to our traditional form.
India is a very promising publishing industry. If you go by statistics, we are third largest publishing ecosystem in the world. And if you go by numbers, we have the largest consumer of this publishing ecosystem, with a very large number of academic education framework that we have in terms of more than 300 million students that we have.
Global classics to regional favorites, the New Delhi World Book Fair connects readers to the world of literature. More than just books, it's a celebration of knowledge, information and culture. With millions of visitors over here and billions in revenue generated, the fair is not just a cultural highlight, but a major boost to India's thriving book industry, cementing the country's position on the global publishing map. In New Delhi with camera person Praveen Sharma, this is Diptanshu Kashyap for the Economic Brief, DD India.